So watching the market today, I am looking at the market depth indicator in the E-mini S&P. I like to look at it in the E-mini S&P the most. I think it's the most insightful. Purple's leading the way since this time frame, about 10:15. So the market rallied, but the purples are still leading the way, which is bearish. So they're banging on the bid, pressing into the bid. There's more orders, more depth going into the bid, and so the order book is larger on the bid side, and they're selling into that large order like liquidity does. And so interesting to see if there's going to be a Friday profit-taking correction here based on this. It's such a strong market, though. It refuses to go down. It wants to S&P wants to maintain 3,000. Nasdaq wants 8,000. And so not sure if this market will go down. You see minus 9,000 here on the cumulative indicator. Let me show you that let me highlight that. Here is the cumulative indicator, minus 9,000. This is the trend between in the order book for the bids and offers, and there's been 9,000 more bids than offers accumulating in the order book on a 1-minute basis. And so that's what we're looking at. The trend in the order book is down, which means they're selling into the bids. And so that's one thing to consider. Nasdaq is not as accurate in my opinion. It's a little bit more sporadic. It's a thinner order book, and I think that the E-mini S&P is more telling. But it's hard to find a good short signal that actually works. A lot of things indicate downside, including the advanced decline line once again. The market E-mini S&P is right at break even on the day, and the advanced decline line has trended down the entire day. So that still doesn't mean necessarily that the market's going to go down. Got the wrong tool there. This is the number of stocks on the New York Stock Exchange declining versus advancing, and there's 3,700. So at the open there was about right around plus 800. And then it sold off, bounced, sold off, and now we're down about minus 131, and they're selling into the bids. And so it's kind of a quiet Friday, but we've had such a huge surge. Will be interesting to see what would happen in a normal market. In a normal market that wasn't propped up so much by Wall Street and the Fed, we would see some selling, I'm pretty sure. But because we're not necessarily in a normal market, this thing could then turn and rally against all odds once again. So, the Nasdaq, they won 8,000 in the Nasdaq. SR counter trends along, and some of our strategies are doing well in this market on the long side. Some are doing well on the short side. Here's tick count trend 2. Beautiful trades in tick count trend 2, 5-minute. The last 4 trades have been really incredible. You see these 2 shorts, picture perfect shorts, and nice long trades too. And so tick count trend is taking the counter trend trade in the slow VIX environment and trading the short side, while SR counter trend 2, E-mini Nasdaq captured the long trade. Quick trade this morning. Hit that profit target early on the SR counter trend 2 V2 5M and SR counter trend 2 V2 1M. Hit that profit target, 25 points each. And SR counter trend 2 on the ES is still long. It didn't hit its profit target yet. SR counter trend 2 Nasdaq is long. Adaptive moving average is long, and these tick count trends have been short. And so tick count trend 2 1-minute is short today, as well as the 5-minute. So those are the trades for today. Those are what I'm looking at with the order book and the advanced decline line divergences in the trading strategies that we are trading in the stock index portfolio.